What's up, everybody, and welcome to this video where we're going to be talking about the top 5 REIT stocks. Some of these pay dividends on a monthly basis. I own all 5 of these stocks. We'll go over every single one. We'll be going over them in an order of the least amount that I own to the most amount that I own. There are 5 stocks you can see on my M1 Finance portfolio right now. If you want to get this portfolio for yourself, it is 100% free. Just check out the link in the comments below. It'll say Dividend Portfolio. You can check it out in the description below as well. You can just get it as long as you use M1 Finance. And if you want to use the M1 Finance referral link in the link or description below, what you'll see is you can sign up for an account, and if you deposit $100, you and me will both get $30 to invest. It's free money that they're handing out, so you might want to check that out. Free stuff. But what 5 stocks are these? So first off, we're going to be looking at Realty Income, which is ticker symbol O, Vici, V-I-C-I, and then we'll look at Alpine Income Property Trust, which is Pine, MGM Growth Properties, which is actually about to get acquired by Vici. We'll be going over that in this video, which is ticker MGP, and we'll be looking at STOR, ticker STOR. All 5 of these REITs are incredible in my personal opinion, with huge upside potential. This portfolio, my real estate portion of this portfolio, gives me a 4.46% dividend yield, which is a very, very solid yield. Over the past year, these returns have given returns of 29.63%, which is outpacing your average S&P 500 by like twofold. So that is a very, very good return, not even including the dividends, which is insane. But before I do go into these videos, before I go into these stocks, all I said, if you enjoy this video, you make sure to subscribe to the channel in case you haven't already, and you turn on post notifications for videos coming out every other day. I always like to see what you guys are doing, what you guys are thinking, so leave a comment what you think about these 5 stocks. But enough of that talk, let's get into the actual video. So as we talked about, the first stock we're looking at is ticker MGP, MGM Growth Properties LLC. They have a price to free flow from operations with a 16.48, which that is kind of just in simple words your price to earnings ratio when it comes to REIT. So it's sitting about 16.48, a dividend yield of 5.25%, which is absolutely insane, and a market cap right now of $12.48 billion. Over the past year, this stock is up 41.78%. And looking on their dividends, they currently have a payout ratio of 86.55%. Now remember, when it comes to investing in REITs, your payout ratio is going to be far higher than your average stock, because they are required to pay like 90% of all their non-taxable earnings to shareholders, and so these payout ratios are going to be far higher. The 5-year growth rate on their dividend is 39%, which is an incredible growth rate and a 5-year growth streak record. Looking on to some more things, what is going on with this MGM Properties deal and Vici? So Vici is going to acquire MGM Properties for an all-stock deal valued at $17.2 billion, which is including the debt. And so based on Vici's share price, the terms of the deal will be, if you own MGM stock, for every 1 share of stock of MGM you own, you'll be getting 1.366 shares of Vici stock in conversion for the deal. Now, what this deal will do will make Vici the largest experiential REIT in the entire world, with an enterprise value of roughly $45 billion, which is incredible stuff. Now, Vici is kind of paying for this deal on a premium, but long term, this could turn out incredible. What we're seeing is that Vici's estimates that the discount is in the 30-40% range because of the assets that they're purchasing. So this could turn out to be an excellent value investment if this is accurate. This deal is expected to close in the first half of 2022, and it's going to increase the free cash flow right away. Once this deal is finalized, Vici estimates that it will have $500 million in annualized free cash flow after paying dividends, which will allow it to accelerate its growth. So increasing revenue, increasing free cash flow, increasing the amount of cash that they make, increasing the dividend payments, long-term, huge value key play. So what we'll see is MGM just reported 3rd quarter financial results, and see what they're looking like. They had net income of $50 million, a consolidated net income of $83.1 million. This was for their Class A shareholders, and total rental revenue was $188.3 million, which are some solid numbers. Now let's talk into the second stock that I own the second to least amount of in this portfolio, which is STOR Capital, ticker STOR. with a P to FFO of 18.57, a dividend yield of 4.45%, and a market cap of $9.54 billion. This 1 year, they are up 26.76%. Looking on their dividend payout ratio of 82.71%, a 5-year growth rate of 5.90%, and 6 years of consecutive dividend growth. STOR Capital here is kind of just their dividend customer profile. You can see you got AMC, Bass Pro, Ashley Home Store, US LBM Holdings, At Home Group. You get the gist. They have a ton of these properties, and these top 10 customer relationships represent roughly 19% of their base rent and interest. So this company is doing incredible things. What we'll see right here is that the 1 year, this was kind of whenever they reported this, which was for their Q3 third quarter investor presentation. They were up 21.9% for the past year. The net lease REIT index was up 33%, and MSCI REIT index was up 37.2%. But long term, this thing is definitely winning in the long term, and that is what we're thinking with this portfolio is a very long term outlook. Net income grew by 5.4%, dividends grew by 6.8%, and adjusted flow from operations grew by 5.1%. Looking at some more reasons why STOR is a great investment in my personal opinion. Remember, everything on this channel is not financial advice, but one of the big differentiators is STOR Capital requires property level profitability from all of its tenants. What that means is STOR Capital will not lease out these properties to just any tenant. They want to see the financials of the company. They want to be 1,000% sure that their tenants will pay on time and will bring back value to the company, and being able to bring value to the company, to the shareholders, so that this REIT is a top tier REIT. And you can also make the argument that this is Warren Buffett's favorite REIT, as Berkshire Hathaway owns just under 10% of STOR Capital. They have 99.6% occupancy, which is great for a real estate stock, and they estimate their addressable property market universe to be roughly 3.9 trillion in size, which technically means that there are $3.9 trillion worth of properties that they could conceivably acquire. Now let's talk about the third stock on this list, which is Alpine Income Property Trust, Inc., ticker PINE. Their P to FFO forward is 12.58, a dividend yield of 5.11%, and over the past year, this stock is up 38.49%, and a smaller market cap of $235.26 million. But I believe that this is going to be far higher, as I think this company is highly undervalued at the current moment. What we'll see right here is their payout ratio of 64.5%, a dividend growth record of 1 year. And this company is a little bit newer. I mean, like you can see, for the past 5 years, they only have been a company listed publicly since 2019. So they are a little bit newer, a little bit smaller. That's why their dividend growth record was not super long. We'll see is this is kind of just their income property portfolio. 14 in Texas, 1 in California, 1 in Pennsylvania, 6 in Virginia. You get the gist, 8 in Florida, a lot of different companies and a lot of different properties that they own, like Walmart, Hobby Lobby, Kohl's, Academy, LA Fitness, Best Buy, and the list goes on and on and on. You get it. You see, some of these people that they have is Wells Fargo, so good credit ratings of A+, AA, so nice ratings on these companies. Looking towards some more stuff. Alpine Income Property lifts its 2021 adjusted flow from operations per share guidance midpoint by 5% as a result of the REIT's growing pipeline. To make that in simple terms in English, pretty much they're doing so good that they raised their guidance of how much money they're going to make by 5%. They now expect adjusted flow from operations per share of $1.48 to $1.51 versus their previous estimate of $1.38 to $1.48. This new range exceeds the $1.44 average analyst estimate. During the quarter, the company acquired more than $55 million of high-quality net lease properties to 14 different tenants, so that is still some very, very good things. Now, the fourth stock on the list is Vici Properties, ticker VICI. Dividend yield of 4.87%, a P to FFO of 16.08, and a market cap of $18.7 billion. This past year, we were up 23.39%. Right now, we have a payout ratio of 78.23% and a dividend growth record of 3 years. They own 27 dynamic gaming destinations and 4 championship golf courses located across the United States. You can just see this is kind of what their portfolio is looking at as of right now. They own a lot of different experiential, different type of venues, like in Las Vegas, you got Caesar's Palace, Harrah's Las Vegas, Caesar's Atlantic City, a lot of portfolios. Check out how big these buildings are. These are just cash cows for this company, okay? Now let's talk about the fourth stock on this list, the fifth and final stock on the list, sorry about that, which is ticker symbol O, Realty Income. You've heard of it before if you're a dividend investor. Arguably everybody's favorite REIT right now with a dividend yield of 3.96%. This past year up 23.25%, a market cap of $40.6 billion, and a P to FFO forward of 20.64. Looking on some more stuff, they have a payout ratio of 81.72%, a dividend growth record. It says 24 years, but I want to say the actual number is 26, and a 5-year growth rate on their dividend of 3.46%. Just looking on some different things, they have a 15.1% CAGR, compound annual total return, since 19.94%, and a 4.3 compound annualized dividend growth since 1994, 96 consecutive quarterly increases, 615 consecutive monthly dividends paid. They have these dividends. They have this company. They're in 50 states, including Puerto Rico, the UK, and Spain. 650 different clients and over 7,000 properties under long-term net lease agreements. Looking on some more things, here is why the best is yet to come for Realty Income. Bigger is better. They just bought REIT in an all-stock deal for about $11 billion, and this pushes Realty Income's portfolio to more than 10,000 properties and gives it an enterprise value more than twice of that of its closest competitor. It was already the biggest name in the market, and now it's simply an industry Goliath. They're going into Europe with a huge market, and different things are looking very, very solid for this company in the long term. Just looking on some more key things, you can see it's starting to expand in a vast new market where there is limited competition. Although the stock isn't necessarily cheap, this gives Realty Income an advantage in financing growth, which is long-term what you want to see in this company. But everybody, that's what I have for you in this video. So if you did enjoy it, make sure to subscribe, turn on those post notifications for videos coming out every other day. Again, thank you for making it all the way to the end of the video. Check out the link in the description below if you want to get my dividend portfolio, or you just want some free stocks, free money using M1 Finance or Robinhood, whoever it be you choose. Thank you for making it all the way to the end of this video, and I will see you at the next one.